Hello and a warm welcome to this week's edition of ProperTV. So quite a lot's happened in the last week and I wanted to catch up on some of the headlines that are hitting the news, make sure that you're aware of what's happening in the property industry in the UK and also overseas. So let's kick off with Brexit, or as I like to call it, Lexit. So what's happening right now, we've seen a lot of flurry of activity happening from the Brexit vote, and the main thing that's been happening in terms of affecting the property market is the commercial bond sector. So what's effectively happening there is in property funds that control huge amounts of commercial property, around about 12 billion in the UK. Effectively most of those funds have closed doors, and by that they've stopped the withdrawal of funds by investors, and they've also stopped new funds going into the funds. So this includes people such as Standard Life, Henderson's, M&G, and effectively what they've done is downvalued their overall valuation of the fund by about 5%, and it's predicted that that could even go further than that, may go down to 10% in the coming weeks and months. That's also affected real estate investment trusts at the same time, which are now trading at just 2/3 of their asset value. Now, in terms of how this affects us as residential property investors, it doesn't affect us too much at the moment, but we've got to be very careful and aware of what's happening in the commercial sector, because effectively this does and will affect us at some point, particularly if we see this market sentiment continue to grow, where effectively we're seeing a rush and an exit of investors from the sector. Now the good news is, in regards to the commercial property sector, it's less highly geared than it was back in 2007, 2008, and in essence some small correction is probably a healthy way to go. Now what this has done though, which will affect us as residential property investors, is it has affected banking stock. And banking stock over the last week or so has weakened considerably, and this is due to two main factors really. Firstly, we've seen this whole exit of retail investors from the sector, and also there's been the index that's come out recently around the Construction Purchasing Managers Index, which has been significantly weaker than previous months. Thus, this has seen some impact on banking stock, particularly those banks who invest heavily in the commercial sector. So people such as Secure Trust, Shawbrook, Aldermore, all have been affected to some degree. Secure Trust has said that they're limiting their appetite to the sector by about 31 million. Shawbrook have been hit again, and effectively their shares have halved since Brexit, and that's because a third of their operating income comes from the commercial market. And then Aldermore's also been hit a little bit. Their exposure is a little bit less, it's about 15%, but they've also seen some impact in terms of that overall market sentiment, essentially seeing those retail investors rush out, and also the weakening of the Construction Managers Purchasing Index. We've also seen this week the Bank of England and the FCA get involved in terms of looking at new measures to shore up the property sector. And these include items such as limiting liquidity to match assets, so effectively making sure investors have to give a notice period of 1, 2, 3 or even 6 months, and also looking at ways in which they can use swing pricing, which is something the Security Commission have looked at in the US before. So there's a lot of things going on in the sector, and we will just have to watch and see what happens. In positive news, however, let's look at what's going on with the residential sector. So right now we've obviously seen some fallout from Brexit, but at the same time that has meant some opportunities have come forward. Now with the pound weakening against a lot of the currencies out there, we are seeing some small movements with overseas investors coming back into the market. And in fact just this week we have briefings from JP Morgan, Jones Lang LaSalle and some of their chief analysts looking at what was going on in terms of the sector, and we're certainly seeing a small increase of investors coming back into the market from Asia and also the USA, primarily because the pound is significantly weaker against those currencies right now. Now, you know, a lot of the industry pundits and commentators are saying let's just wait and see what happens. You know, there will be more disposals coming through, that's for sure, and that will probably set the benchmark in terms of pricing going forward. We've also got to look at what exposure the banks have got in terms of the property sector. And with 65 billion of exposure, it's certainly something that we as investors need to be aware of. Now, right now, if we look at what's happening certainly in London, prime residential has lessened a little bit, it's not as attractive, sales of apartments are still going through, and there's obviously been a upwards pressure put on the private rental sector from taxation that is coming in 2017, and also stamp duty that's already hit us. There is still more positive news though coming out of the residential sector, and certainly if we look at some of the house builders results that have come out in the last week, they're extremely positive. So first of all, let's have a little look at Persimmon. Now Persimmon, as you know, one of the major house builders in the country, they've seen an increase in visitors of 8% year to date, and they're building on 35 new sites right now, which has gone up significantly year on year. Now, for investors investing in the house builder, they're being promised a 900 pence dividend per share by 2021, which is a significant dividend for a house builder. And Persimmon are in a great position because they've got just over £460 million in cash assets. So in terms of an investment and an opportunity, certainly Persimmon seem to be doing the right thing. Now, we've also got another smaller builder, MG Gleeson. Now, MG Gleeson specialise very much in urban regeneration, land development, and very much the lower end of the market, and they've seen a 5% increase in their share price over the last week. And that's a particularly great increase in what is at the moment a significantly weaker market than it has been. Now, where's this come from? Essentially, they've had a 20% increase in the growth of their low-cost home sector. They've also sold another 7 plots of land, which effectively is going to give 822 new units, and they've also started development on a 100-acre commercial land development. So all of these things are adding up to showing quite a positive and rosy week in the land of house builders. And then finally, I just wanted to end up by obviously discussing what's been on most people's minds this week. Was the Bank of England going to reduce the interest rates? Now, before Thursday and before the Monetary Policy Committee met, the odds were in favour of those interest rates being cut. In fact, the pundits were predicting about a 78% chance interest rates would go down. Now, clearly we've seen that they voted by 8-1 to hold interest rates at the moment at 0.5%, but they are looking at doing some kind of stimulus package in August. Now, who knows what that will mean, but the pundits are still predicting potentially by August, they are feeling it's around about a 90% chance that there will be some cuts in interest rates. We don't know, who knows, we'll have to wait and see. But certainly in terms of investors out there right now, there's a great amount of products available to you on the mortgage side, which are at great low interest rates. Now, should the interest rates go down, obviously that is going to benefit those of you on variable rates and those of you on tracker rates. But always remember to read the small print, as we've seen in recent months where we've had impacts from banks not necessarily honouring those small prints in the contracts. So this is Matthew Moody for ProperTV. Thanks for listening. If you do have any questions, comments or things that you'd like to cover in another edition of ProperTV, please do get in contact. We'd certainly love to do more articles and make sure that we're delivering the news that you want to hear. Thanks very much.